Good morning, good morning, good morning, TGIF traders. We write February the 21st, Friday, and we are getting ready for another weekend with another election. And in the meantime, we're going to run through the headlines as usual and look at what is happening on those PMIs because it was already kind of interesting. So here we go then on the headline front. And I first straight away want to jump a little to next week because yesterday I already said that we're in for a couple of hot weeks on the geopolitical side and political side simply as well. Um, Next week we will have this G7 and G20, and it has already seen some waves where the US is planning to veto a G7 statement where Russia would be named an aggressor. So the tone is already set for next week's G7, and afterwards the G20. Um, Putin could be there virtually, a lot of others as well, but there are already some countries who said that they would not send their finance minister because they are too busy, under whom the Japanese finance minister Kato, who is working on the budget and speaking about that budget, he did comment overnight that raising interest rates in rising yields in Japan are now starting to put or risk putting stress on their debt servicing, and we know that Japan's public debt is running at about well over 200% of GDP. So any basis point that the Japanese longer term yields are rising, it is really putting a lot of stress on there. And in the slipstream, we had a comment, and that was rather interesting. We had a comment from Ueda, who of late hasn't been too vocal about those yield rises in Japan, perhaps even welcoming them. But now he found it necessary to come up with a statement saying that if these yields continue or would spike higher from where we are, they are ready to intervene. Not perhaps not in a big way, but they are ready to start buying JGBs again to smoothen any of those spikes. So that has seen a little setback in the Japanese yields overnight, despite we had a higher CPI coming out there. We see the national CPI came out at a whopping 4%. The core came out at the 3.2%, which was mainly driven by energy and food. If you strip away fresh food and energy, that rate came in at 2.5%. And but the expectations are for next month, the CPI potentially coming down a bit because the Japanese government is putting some measures in place to dampen the effect of especially energy price hikes. And we will have to see next month if this spike here was just a couple of months of being higher, and then they can put that one back down next month. So that's going to be interesting. But I would say that the main line still overnight regarding that those Japanese yields was Ueda coming out. And we all know that the Bank of Japan is extremely independent, but then is it really? Because they also know pretty well that the Japanese debt needs to be funded, and they cannot let the yields go really much higher than where we are now, or at least not fast, in order to help the government to continue to fund their debt. And as we also know, they have been putting a series of stimulus packages in place as well the last couple of years. So they need to be funded. So give and take what's happening in the markets, we may perhaps start to see interesting levels there on the JGB, and that needs to be monitored, obviously. Also, as I said, because we are coming into levels of yields where I reckon the Japanese whales may start to get interested. So a bit of yield watching there in Japan. The yen saw a little setback, as we will see when I will be looking at the charts on the back of those Ueda comments. But we are holding under break levels there right now. So I'll have a look at that a bit later. Elsewhere, and we are going back to the geopolitical side of things, the trade side of things. We had news that the China Vice Prime Minister Li Feng is to go and have a meeting, will have a meeting with Besant, and they will talk about economic cooperation, likely talking about tariffs as well, perhaps even talk about the currency as well. So that's going to be another interesting thing to watch between the US and China, because as I said already, going a hard line for a while is one thing, but keeping that hard line, speaking about Trump's tariffs on China, but keeping the hard line may be a totally different thing. And we're seeing those negotiations now ramping up a notch. So those are things that we need to keep a very close eye on. Um, yeah, we had a few. I mean. For a Friday, less encouraging headlines. The one of the Iran's Revolutionary Guard generals came out with a statement saying that they would or could prepare a third large-scale missile attack on Israel, which would wipe out um, Jerusalem and the whole country. Actually, he said so. We need to be on our guard again for weekend risk in any sense, whether it be on war fronts or tariff fronts, and um, we never can lower our guard these days for potential weekend headlines dropping. um, Elsewhere, Russia also came out with a statement saying that they see an increased threat to Russian ports by NATO movements, and they see this threat as intensified. So they are keeping really the pressure up. We already know about how Trump is viewing this whole situation, how he is not a big fan of NATO either. So that's another one that we need to keep an eye on. And speaking about those tensions, this morning, again, Swedish authorities are now investigating another damaged cable in the Baltic Sea. So we keep the geopolitical headlines just rolling in. They just don't let us off for a single day, right? Moving over to what's been said on the central bank's side, and Bullock was out last night. I'm not going to say that she starts to change tack. She is still a hawk, as we know, but she did say that they are moving to a completely data-dependent stance, that the labor market is still tight, and that they are ready to act on the rates if inflation slows sharply, and that's where she keeps this hawkish rhetoric going. She will need to see inflation go down sharply in Australia before imagining bigger rate cuts than the path that they are on right now. RBNZ Conway was out as well, and saying that the data and the level actually of the Kiwi were consistent with his view of a positive growth outlook, and the Kiwi responded relatively well to it, because we saw Kiwi gaining a bit of ground against various currency, where we saw the Kiwi dollar already on the rise because of the dollar giving back some after the RBNZ as well. The Kiwi was already doing well, but the Kiwi market is taking this as a positive. If you have a positive outlook on growth, it is normal that you have a relatively positive outlook on the currency as well. So the Kiwi has regained some strength, and also, and I will look at that also on the crosser side of things, not only against the US dollar. What else am I looking at? Yeah, there's always a lot of discussion going on now because Trump has been putting so much pressure on his allies. In the UK, there is also a discussion going around to up the defense spending. Don't think that they are going to ramp it up or double it up from 2.3 to 5% straight away, but they are negotiating. The US military advisors have told Starmer that it's probably time to raise it by a couple of tenths or even going from 2.3 to 3% in the end on raising defense spending there. And Macron was also hinting about on the same kind of thing, and also wanting to increase the defense spending to gain some independence from U.S. reliance as well. So that is sort of what there is going on the geopolitical front right now. And so let's look at what's been happening on the data front. So yesterday afternoon, we saw a setback. We've already spoken about that. We saw a setback on the Philly Fed data, which are February data now. I remind you that now we're getting February data. We are going to see where or if the consumer or the businesses still have that positive stance that they had when Trump was voted in and prior to the inauguration. So now that he's in the seat, now that they know roughly what he wants to do, where he wants to invest, who he wants to slap tariffs upon, we will see how the business sentiments are now evolving. So this was a first interesting one. We saw a bit of a setback there, but we also had yesterday this warning that Walmart sent out, and warning on their sales. The stock, obviously, Walmart stock got a bit of a slap around the ears, as we saw, but it's also affected the global sentiment. Although the futures this morning are back on the up, but the global sentiment in the market got a little bit of a hit there, and which is interesting to see because the correlations that are evolving are the interesting one to look at again. Now we are seeing that if sentiment in the US comes down, but stocks coming down, usually when the dollar goes up or yields go up, the stocks tend to come down or vice versa. Well, this is how I would expect the things to evolve. Rather, it is that if you see negativity in a country, whether it be the US or elsewhere, and you see the stock market coming down, it is not necessarily, I mean, and you see the currency actually coming down, it's not necessarily going to prop up your equities, because sentiment is something different than just trading on the back of interest rates and trading on the back of hard data and stuff like that. Sentiment is a different kind of trading. So what we saw yesterday is, in my opinion, a relatively logic move that we saw. So this going forward is going to get more and more important, in my opinion, because sentiment will have an impact on growth, and growth will take over, and the dollar, equities, even yields, they can all move in tandem, instead of when you have a normally smoothly going economy that you see a kind of opposite correlation, inverse correlation. Okay, I think now we need to get ready to see inline correlations with what sentiment and growth is going to show us. Moving on. The oil inventories a bit in line, a higher build that was also shown the day before in the API stocks. Um, Oil is rather trading on sentiment still and supply issues or more supply in the market than usual. So I think it's not really moving on instant data like we see now over there. Okay, we had a bit of a repeat there from Jefferson, and then we move on to the data that we saw overnight. Trade balance in the Kiwi didn't do much. Um, the manufacturing, the PMI data, then it is PMI day. Aussie kicked it off, but rather just before Bullock spoke, so it didn't really move the needle much. We are trading, those PMIs came out just above the 50 mark, which we know is expansion or a contraction line, the 50 mark. I didn't see anything in the comments that really should change my opinion about the Aussie right now. It looks to be still relatively steady, but I'll talk about the charts a little later. Just see here. Okay. Then we move on to what's happening today. We saw a bit of a give back here again on the versus expectations, but relatively in line. Both PMIs out of Japan again didn't move the needle too much. We saw a bit of a move on the CPI, but then UEDA gave the yen a bit of a small kick in the teeth, and yeah, the yen is still doing okay on the crosser side, where the dollar regained a little bit back above 150. On the cross side, the yen is still doing relatively okay. And then moving on, we had a pretty decent retail sales report out of the UK, which underpinned the sterling at the start of the day. Um, Public sector net borrowing is still, it could still become a bit of a headache for Reeves. Okay, we are gradually closing in on what she may announce in March. That's of course going to be scrutinized by the markets. We still have a little bit of time, but in the meantime, we have to admit that sterling has slowed down. Yes, we had a decent cable run. Yes, the sterling is still doing okay on the crosser side, but I'd say it is showing signs of slowing down, and the market more taking a wait and see attitude, perhaps on the sterling right now. As I said, on the cross is still okay, but if you isolate the euro sterling for a minute, I think the problem is rather what's happening in Europe still than really sterling strength right here and now. And that brings us to that to the European PMIs then. Manufacturing holding relatively in compared to the prior one, but still deeply negative. But the shock here was the services PMI. That was supposed to come out much closer to the 50 level, but it came out at 44.5, which was a bit of a shocker. France actually it did slow down at the end of last year and over the turn. But France was actually doing still relatively okay on the services, but it's really got a kick in the teeth here. People speaking about the recession now, worst numbers since 2023. So France's worries are rearing their ugly head back up, and I think that is going to continue to weigh on the global European sentiment. The German, excuse me, the German PMIs relatively in line. Manufacturing ticking up a notch. The services are still above the 50 mark, mainly driven by prices. German sentiment is okay, but nothing really yet to write home about. So we need to continue to monitor that because obviously Germany will have a big impact on what the European sentiment is going to be going forward. All right, because we know about the German slump, but we also will have to look at whether they can stand up or not. And I'll talk about the German elections in a while. The Italian CPI coming out. That was unrevised, okay. And then we had the pan-European PMI coming out, just reflecting what's going on, and this lower number is reflecting what was happening in France, obviously, okay. Last but not least, we have the UK PMI coming out. Not much of a mover, nothing much to say, although manufacturing is slowing down again. We still see this is just European right now. The manufacturing sector has been underperforming for a long while now, so that is still not really changing. There was a little bit of an alarming line there in the comments on this UK PMI, is that it saw the sharpest decline in UK private sector employment since 2020. So again, another reason why I'm saying that potentially this positive vibes in the sterling may not yet reverse, but they may just stall a bit. Okay, this positive vibe. We will see what's happening next. Right. What's furthermore? Well, we still will have the US PMIs coming out a little bit later. We also have um, the Michigan expectations. It's also now a February data, so watch out for that one. It could also be a mover. And for those watching Mexican peso, we do have economic activity data coming out there, but they are still for last year. Okay, so I'd argue that is a very much back-looking data points, similar to Canadian retail sales. The January one, the preliminary January ones, they could be a bigger mover than actually those ones that we see for December. And what else? Well, we have McClem speaking a bit later today as well, so that may be an interesting watch for the Canadian dollar, which has regained some strength of late. So he will tell us whether the Canadian dollar can continue to strengthen a little bit, or whether this was all just a dream. Okay, what's happening on Sunday? Sunday we have the German elections, and as most of you will know, um, it's not really very clear what's going to happen there. The clear thing is that Scholz's SPD is likely going to get a slap around the ears. They are going to lose their status there as being one of the major parties, but the real question here is going to be, well, first of all, how much will they lose? But how much can Merz's CDU, CSU regain of that? And can they hold off the Alice's Weidel's AFD, the far right? Okay. We also know that well, I'm not going to call it a Musk vote. That would be a bit strong and a bit and a bit harsh versus the German people, my German friends. But we know that Musk is supporting that far right AFD party, and if the question is how much will they gain really, because it could really mess up any potential coalition that may be on the cards in Germany. So right where we are now, the latest polls, and those are, I think, yesterday's also. The latest polls show that Mercer CDU CSU is turning around 30%. I'm rounding it off. Is turning around 30%. AFD is turning around 20%. SPD is turning around 15%. That is a bit of a giveback. Greens are around 13%. I'm putting the Greens in there because and even FDP could be playing a role as well because as we know the Greens were part of the traffic light coalition that they have until now in the in Germany. So all of them will be important because if CDU and SPD would want to go together in C, and assuming that they only get the 130 and the other 115, as the polls are showing, they will not have a majority, so they will need somebody else to get a majority. Okay, um, so that is something that is going to really have to be monitored quite closely. Um, I'm not going to go too much over the real programs, but there's a lot going on about public spending, about infrastructure spending. The thing is, and Merz doesn't want to hike taxes. He even wants somewhere to cut them to try to counter this AFD progress as well. But there could be a real issue if AFD, for instance, moves up to 25 or so percent. The other ones may fail to find a reasonable coalition. And I say a reasonable coalition. Why? Because none of them agree on how and where they will get the money from to spend on infrastructure. Okay, so they are going to have to find somewhere a reasonable coalition to fight off the AFD's progress. But if for any reason AFD would really get there and get in a way to be the biggest party, there could be a real mess coming in Germany. And if there is a mess in Germany, you can say that there will be a mess in Europe as well, because we have seen already in other countries the advance of the right-wing parties. We've seen it in the Netherlands, we've seen it in Austria, we've seen it in France, we've seen it in Belgium, we have seen it in some other countries as well. It may create a bit of a mess for going forward for Europe as well. And as you rightly say as well, Mike, they need to reform the debt brake, but really it's going to be an open question: is can they? Okay, can they? And that will be show us that will be shown to us once we start to know the results. And I guess the results will start to roll in on Sunday night. So that is really something that is going to have to be watched very, very carefully for what is going to happen. And where we have not traded really, we did not so far trade German elections, but now it's time to look at them. Okay, I mean it's really now, because on Sunday we may come in and see a bit of a gap, and I would argue if the AFD gains really too much ground, I'd say that the first reaction, maybe not the final, but the first reaction would be to for the euro to come off. It may be just the first reaction, because it's going to be a natural reaction in the market. That is my view. Okay, it may not be the market participants' view, but I find it that it would be negative for the euro just because it creates a mess. Okay, and that would be then the first reaction. Okay, and I think the reaction in the euro would be to get back to those levels. I'm not sure whether we're going to break down below them, but that would be my first reaction, to say, okay, this is not really good for Europe as a whole, and certainly not for Germany. Okay. Um, Now let's dig into what is happening today, and we've seen this revival of the euro dollar. Um, It's mainly a dollar-led move, as I was already saying. I do. It's all based on sentiment. It's all based on what the market thinks about the position of strength that the US will have in negotiations. I've seen a few comments saying that America is not in such a strong position, and that's why Trump is so overly vocal, is not in such a strong position as it was a number of years back. But I still will leave that in the middle right now, because we never know what kind of deals can be made between US and China, between US and Russia, and some others. But okay, we saw a bit of dollar weakness. We came back close. Well, we traded over 105, and we came close to what I would call is a pretty important first important zone here. Okay, you can draw a trend line here. We stopped right in front of it, but I think this whole zone up to 105.30, 35 is going to be important, because that is the gateway to get to that 106 figure 15, okay? The 106 figure 15 is still going to be the major level, all right? Once we get out of this whole thing surrounding tariffs, surrounding trade, surrounding geopolitics, we will see where we are. And if the euro then manages to move back above 106, I think there is potentially a bigger issue coming for the dollar. And because of the euro not being such a strong currency right here and now, if we manage to do such a break, then I think there is scope for the dollar to weaken further, and we may see a decent acceleration here. Until then, we need to respect the levels. So that is the top side for today going into the weekend. And on the downside, we're this hinge here, 104.5, is still very valid. I think if it goes below, we see that we went back down to 104. The figure, same thing here. Same thing for today. Let's see what those PMIs are going to give us in the US. Let's also look at the Michigan. Let's also keep a very interested ear to what politics are telling us. Okay. But the numbers, the data in Europe this morning have not been supportive for a continuation of this euro, but we will see what the dollar says this afternoon. Okay, can we get much lower? Ahead of the weekend, I would really be surprised that we break down. Okay, it is possible, because we are Friday and perhaps a bit of less liquidity, that we get down the whole way down here. But I'm more in a kind of a range mood right now here on the euro dollar. Let's move over to the cable. That saw this finally this break, and we moved above 126.10.15 positive. But then I said also, watch out what's happening in the 60-70 zone. We moved above, but it looks a little bit failure-y, okay? I would like to see this one really break here above this 127, where we traded around already a number of times, to confirm this move higher. So I'm going into sort of range mode as well right now on the cable, because the PMIs were not convincing for a really strong move higher in sterling. But it is still somewhere positive. So I would say, like, this trend line is a first, well, 126.10.15 again, then just below 126 the figure, and the prior low 125.70 is to me going to be the underside of a potentially fresh range. 127 needs to break, and then we can talk about a much bigger zone, which is going to be 128.15. This is going to be, in my opinion, comparable to the 106 in the euro dollar. That those two are probably going to hit. If we are going to hit those, they're probably going to hit relatively around the same time. Euro sterling unchanged. It's the battle now of it looks to be the battle of the weaker ones now, but I still would argue that the sterling has a little bit of an advantage over the euro. So I'm keeping the short running, but I have really tightened up the leash now. I'm if before the weekend we start to go above 83, I'm probably going to cover the rest of my shots from here and then and call it a day and see what happens over the weekend, over the next few days. If not, well, just don't change a winning team. I think we can still go for a bit of a test of these levels here around 82.60, and why not go see this one a little lower? It's still looking heavy enough for this kind of move. Um, what are you guys saying? Just reading through the chat. Okay, for now you're just what economic effects when you mention whatever tariffs on can replace the US currency. Okay, so you guys are just discussing. Okay, Euro Aussie, yes, the rage. Yeah, Brandon, you're talking tariffs. You should be listening to the Flow Show. I'm joking, of course. First of all, let's look at the commodity currencies, but because I think they're holding pretty well. We are in a bit of a wedge here on the Kiwi. I can see a bit of resistance coming up, okay, around 57.80, right, on the top end. It coincides with the rest of the dollar pairs. So on the dollar side, I can see a bit of resistance coming up. Maybe resist a little bit, go back for a retest of lower in the 57.30s or even 57. The figure is always possible, but it's now looking a lot better than it was looking a few days back. Okay, it just stays too weak for me for too long to enjoy this rally. But I was long Aussie, so that wasn't too bad. Now I let my Aussie go this morning. Why? Because I showed this yesterday as well. We're coming into resistance here. Okay. 64 the figure. We went slightly higher. We have the top of the cloud coming in at 64.10. We have the 38.2 coming in at 64.15. I'd say, well, I am respecting this right now. So I've been long Kiwi from around here, I think, around 62 and a half. So that's been a decent ride. Uh, well, 62 and a half, or was it even lower? I don't really recall the rates, but it's been a decent ride. Decided to take profit this morning, and now I'm waiting. I won't refrain to push the buttons again if it breaks, if the dollar shows more signs of weaknesses. And as a matter of fact, in line with the Kiwi, it is holding well. Okay, it is holding well. If we get a setback into this 63.30s for sure, I'll probably try it again to get back into a long position. But we may not even get down there depending on the US rate. So keep a very close eye on what's going to happen here in the next 30 points for the Aussie. Aussie Kiwi testifying of renewed Kiwi interest because it has come down. Unfortunately, I did not get that extra test back up to get short again. We never reached even close. But what I said, we could have seen an intermediate or at least a temporary top. It seems that it is the case, and Aussie Kiwi is now moving back down. We could just continue to trade this wedge for now, which would mean that we are in for a bit of a retest of 110, 109, 109.80 at some stage. Remains to be seen about the Aussie as well, but it looks as if this pattern is now respected. Euro Aussie for Derej. Euro Aussie for Derej. I'd say it's still it's still weak, and it's still weak. But this trend line here now, the bottom end of this formation has held. So we need to respect that, okay? But since it's a downsloping line, there's nothing that prevents your Aussie from doing something like this and just continue the gentle slide. As I said, I'm viewing these antipodians are quite positive for me right now. So I don't see too much of a reason, especially also looking at the numbers that we saw this morning. I also don't see a reason why all of a sudden we should jump higher. Now, don't forget also there is, if you are in a position that we have those German elections on Sunday. So stay in the position that you want to stay, but I would advise that at least if you have a big enough position to reduce a little bit of risk if you are in profit and just go into the weekend with an open mind and ammunition to add to positions again if that would be needed, okay, or warranted. And the Euro Kiwi is also looking very weak now. So this range this channel that I was speaking about and monitoring, it's giving way. Okay, it is giving way, and that testifies of two things at the same time: is the regained strength in the Kiwi and the continued weakness of the euro, and as a result, we are breaking down. And as I said, if we look at the width of this channel, I'm not sure whether we are going to get it, but that would bring us into the well into the 180s, perhaps even a bit lower. Keep an eye on what's happening around 182.15, and I would say add 182.35.40 because we could see a little bit of a move back in there and then continue lower. But my overall bias on this one is for a weaker one. Okay, for now. Metals. Gold saw that famous setback, one more, and yeah, I don't really know what to do with it right now, but it still has this beach ball feel to me. We went down again, couldn't reach that 29.10 yet, but it's bouncing already back above 29.30. I still don't see unless you are a really short-term player and you want to take those spikes to counter trade, why not? But I don't see a fundamental reason to be short yet. That can change if tensions are resolved. But Iran just told us that perhaps the stress situations around the globe are not yet ready to completely be resolved. So that is going to be an ongoing story to watch. Silver still in the upward channel, still respecting the top side. It's also seen a bit of a setback yesterday, but we're holding this intermediate trend line a bit too steep for my liking. We're turning around 33 bucks right now. We still need to break above here to continue to go, but it is still encouraging somewhere. I've tried it. Haven't kept the extra bit right now because I wasn't sure about the dollar and stuff, but it's still looking very positive nevertheless. Okay, so I'm keeping my base longs running, and that is it for now. And I may actually try and buy a break if it goes again. What else, guys? Anything that you guys want to talk about before I close the books for this week? Um, Yeah, I promised you to look at dollar China and then I forgot about it, right? Lira ruble brand can go up or down. I hope that was of a great help to you. Um, dollar yuan, and let's look a little bit at the longer term picture in the dollar yuan. I think it's been really interesting that we had a hold here towards the end of the year, retest in January and coming down 721. If that starts to go below there, we can drop down a fair bit, and we need to keep an eye on it because of those talks that are going to happen between the US and Chinese officials. Anything positive there, and I think we could be in for a break. I'm actually going to look for a slightly negative news because I think it will be only temporary. If we see a move back up to like 730s or so, I'm probably going to join Ryan, by the way, who is still short, I think, a little bit, to try and get short. we know where the stops need to be in the more medium term. Anything above 730, 738, get out of there. But until that happens, it may actually get down a little more. 10-year yen. Yeah, the 10-year yen. We this is the Ueda effect. We were trading around 146 after the no, around 145 actually, after the uh, Japanese CPI, but this is the Ueda Kato effect. Okay, we know that from the start when Ueda took the seat at the Bank of Japan. Remember that first day when they had this meeting between the government and the Bank of Japan, that they would closely work together. That's why I'm saying the Bank of Japan independence is quite relative. Um, so I think we need to listen to what that government and Ueda are saying, but I still think that perhaps this is just a bit of a setback, and we will find support unless the rest of the yield sphere comes down rapidly. Then we may see a bit lower here. But just Ueda saying that they might intervene on a spike in the JGB market is perhaps not enough to completely reverse this. Okay, I would be really surprised that the 10-year JGBs would go down so rapidly. And that I think I should have a quick look at what happens on the yen there. And we saw this move down under 150 as we witnessed yesterday. And we came back up on those Ueda comments. We came back up relatively close to that 150.80, 150.90 I spoke about yesterday, and it capped there. So that's a good indication. That's a good marker now. I'd say what happens on the dollar this afternoon will be decided upon by the PMIs in the Michigan. But any move up here around 151, 35, 40 should be finding resistance as well. I think bad news for the shorts would be if we start to move back above that famous 152. It's still your magic level, but I'd suspect right now, after having spoken about all those tailwinds that the yen is having right now, is that we will find sellers on rallies. But then what is the best instrument is going to be the question. And I still would say that if you look at stuff like euro yen, for instance, we had a quick peak back above 158 on the euro yen, but rejected it. That could still be your if you see a quick spike on the dollar yen, for instance, that could still be one of those that will be a candidate for reinitiating shorts at some stage. But on the tip of my toes because we are Friday. And that, ladies and gentlemen, closes the votes for this week. Thank you very much for being with me. Ryan will be back on Monday. Wishing you all an absolutely excellent weekend, and keep away from too much risk because we never know what headlines may drop. Okay, trade safely, and we talk to each other on Monday. Thanks very much, everybody.